Hey everybody, it's Brian over at Showcase Agency. Today we're talking about reverse mortgages, and what we're going to cover today are the pros of reverse mortgages, or the advantages, you could say, of reverse mortgages. So we've got a great guide on that called Reverse Mortgage Pros and Cons. So we're just going to go straight to the guide and take a look at the pros. So zoom in with me. The first advantage is there's no mortgage payment as long as you live in the home as your primary residence. So that's always like probably the number one attraction. You get rid of the mortgage payment. Second of all, if there's enough equity in your home, you get cash, you can use it however you want, still no payment. Number three advantage, if you didn't know this, the cash is considered tax-free because technically it's not income. It's a loan that is repaid, later once you pass away or once you're no longer living in the home as your primary residence. So the cash is tax-free, it's not income, it's not capital gains, so it's not subject to any of that. There's no credit score requirement. There's no debt to income requirement. Now there is a discretionary income requirement that does apply. You got to have about $800 or so discretionary income a month if you're single. Discretionary income if you're a couple, you need around $1,100 or so. Another advantage, you still hold title to your property. You don't give the title to someone else. Another advantage, you can pass your home along to your heirs the same way that you plan to now. There's no change. Number 8, if you're behind on mortgage payments or you're behind on other bills, reverse mortgage because you don't have that credit score requirement, and because there may be enough equity in your house to wipe out all the bills and to wipe out the mortgage, that's an advantage. You'll never have to make a monthly payment as long as you are staying in the house as your primary residence. And like we've talked about today and on some other videos, even if you're being foreclosed on, if you can get this process started soon enough, it can save you from foreclosure. So some great things. Another advantage, if your home needs repairs, the loan can be funded with some of the proceeds. The proceeds are just held back. And then once the loan closes, once the repairs are made, whatever money is left over is just returned to you. And then our last advantage here is if you choose an option, because you've got different types of reverse mortgages. If you choose an option that has a line of credit, whatever you haven't used on your line of credit, that's going to grow at around 3% to 4% a year, depending on some different things. So again, a reverse mortgage, it's something important to consider. And we've got some different resources for you. One thing that we would suggest is that if you're looking into a reverse mortgage, get scheduled with myself or Karen. We've got over 20 years of combined experience with reverse mortgages. We'd be happy to answer all your questions. We want to give you some things to think about. We want to get you some additional information, new information about reverse mortgages. And another thing that we want to do is we want to make sure that we're getting you a reverse mortgage quote and a reverse mortgage amortization schedule. Now on the quote, this is going to show you different reverse mortgage programs that you're eligible for. It's going to show you the cost of those programs, the interest rate. It's going to show you the amount of money that you're estimated to receive. So that's super important. The second document is your amortization schedule. Now, if you've seen an amortization schedule on a regular loan, you see that the mortgage balance is going down and it shows you, okay, in X number of years, you're going to pay this off. The reverse mortgage amortization schedule is different because your balance is growing, right? It's going up over time because you're not making a payment, but there's mortgage interest, mortgage insurance, and then there's also mortgage interest. So your balance is going up, but while that's happening, your property value is likely going up as well. And so one of the questions that people have about getting a reverse mortgage is whether or not they're going to end up owing more than the house is worth in 5 years, 10 years, 15 years. Well, the amortization schedule is what's going to answer that question for you. So if you want one of these, get scheduled for a discovery call. Go to showcasereversecall.com. We've got a great guide on reverse mortgages. That's what we were looking at here. You can get a copy of the guide at showcasereverse.com. And then one last thing for you, if you're looking for more videos like this, check us out on YouTube at reversemortgageyoutube.com.